What's going on, guys? Nick with Mission FX here. I'm going to be making this weekly video for you guys right now. Today it is June 16th, 2018. It's a Saturday here in Fort Worth, Texas. Nice day. I just got a cup of coffee, went for a walk a little bit ago. Now I'm back here at my trading desk on my chart. So I want to get this video out to you guys. I never have a specific routine or whatever that I'm covering. I just kind of cover whatever I feel needs to be covered for the week so we can sort of recap. We can sort of debrief and analyze what happened that week, and then we can get prepared for the next week. So that being said, I'm going to go over a few trades I took last week. Last week was a down week for me, negative 180 pips. I was down. So for me, I'm still using standard lots, so it's an $1,800 loss for me last week. That happens. I want you to understand that happens. Some people learn from these gurus and these social media marketers. I mean, I'm one of them. I promote the hell out of my program. But let's say, for instance, some of these people who literally only post blue profits. That's it. They only post profits, only post screenshots of their profits, and they're just like, yeah, it's great. I took $1,000 into $100,000 in 1 month of trading. I had no losses, and it's just great. Just join my program. Like, that's what they say. And so for me, I mean, you gotta understand, trading full time. Anyone who has been trading full time and they know what it's like, they're gonna tell you, like, yeah, you're gonna have down weeks, you're gonna have down days. It just happens. 2 weeks ago, I had 430 pips of profit that week. Last week, I had 104 pips of profit, and this week I'm down 180. So I'm still good on the month. I'm still up on the month, still good, like over 200 pips or whatever. But just that being said, you're gonna have down weeks. So just don't let it get in the way of your psychology. Don't start questioning yourself as to whether or not you're a good person or anything. Just take it as it goes and just make sure that you're following your system. If you had a down week because you were breaking your trading rules and you knew you were breaking your trading rules as you were taking trades, then you deserve to feel bad. You deserve to go through all the psychological emotions and negativity because you broke your trading rules. But if you followed your trading rules, if you managed risk very effectively, which is the most important thing in trading, I say this all the time, then you shouldn't feel bad because you followed all your rules, and you know that if you keep doing that over and over, yeah, you're going to lose a few battles here and there, but you will win the war. You will be making consistent withdrawals. You'll be living the life you want, be living free and doing whatever the hell you want, getting coffee and going on a walk on Saturday instead of going to clock in. So that being said, I'm going to go through a few trades here. This was GBPJPY. Trade I entered last week. On the H4, I just noticed that we had a little downtrend, and so I just connected all our highs right here. And I noticed price was playing around in this area last week whenever price got to this trend line, started chopping. So this was on the 12th. Okay, if you look down here, this was on 6/12. So this was 4 days ago. Price started chopping out there around that trend line. So I was like, okay, cool. I'm going to see if we can find a reason to enter. So I went into here to the H1. And I tried to find a pattern that would allow me to take a sell on this trade, to pinpoint the perfect entry. So obviously it's going to be somewhere near the trend line, but we want confirmation. We don't just sell because price comes to a trend line. That's not the way I trade. So here's what I saw. I saw we had like a downtrend here, a little range, and then we broke out and retested that before quickly pulling up. So this is where we start. That's our range. If you guys know how to draw Elliott waves, I go through this in my training on the website. But this was our range right here. You start in here. Waves 1 and 2, which is always the breakout and retest of a range or a trend or a little tight little peak or whatever. But you just start at like a low where the market was inside a range, and then it finally got out of it, came back and retested the area before quickly going up. This break and retest should be very clear, and this break and retest will always be 1 and 2. They came up here to wave 3, pulled back to 4, and then finally went up here to wave 5 before we started seeing divergence here. So as you can see, these peaks are all going up. These peaks are all going down. On a divergence like this, I typically like to see, I typically like to see these divergent peaks come higher. It would have been great if it came to the trend line. You could have sold that. But my entry is always 1, 2, 3, 4, 5, and then after wave 5 is formed, I wait for a peak to go even higher. This would have not considered that one, but this right here I would have considered that went higher, and as you can see, it was divergent. These were going up, these were going down. So you could have sold right there. I always say sell back to the previous support resistance area. So it could have been somewhere in here, or if you want it to be safe, could have been somewhere in there. So if we would have taken this trade, you would have sold right up in here. If you got a bad entry, let's just say you got executed right here. Your take profit's going to be right in here. So about 106 pips, and you're going to risk 106 pips to do that. So 1-to-1 risk reward. So as you can see, very little drawdown, came straight into profit. If you want, you can go a 1-to-2 risk reward. So this right here, you would have been risking about 52 pips to go for 100, so that's good. I typically do these trades with a 1-to-1 if I'm taking the divergence at the tip, because you don't want it to spike even further and then stop you out on a good trade, because typically after wave 5, all the spikes up are just to create confusion, and all of those are the fake outs typically. I'm talking typically meaning 90% of the time. Just back test it where you see 1, 2, 3, 4, 5, and then after that you'll see a few swipes up even further trying to hit stops before the actual market falls. So that being said, I don't like to do it super close, but even then, if you just want to manage risk very well, 1 to 2 is good on this. Now, after that, what you can do is, I saw the market break this little trending area, came down below. This is not a portion of the whole Elliott wave pattern. The Elliott wave pattern we were looking at starts back down in here where it made this breakout and retest. So 1, 2, 3, 4, 5. So as far as profits are concerned, I wait until I see like a good break and retest of trend before looking to enter. So here's starting with our Elliott wave pattern uptrend, something like that. Okay, if we want to include that peak in there, we can do something like that to include that peak. Market clearly broke out of this uptrend, which would have been respected 1, 2, 3, 4, 5, 6, 7, 8 times and then dropped. So this is a clearly respected level that everyone's looking at. Okay, so this price came up and tested that area. Remember, we're on wave 5. We've already had our divergence. If you traded that, you'd already be out of the trade in profit, and the market's coming up for the retest to see what's going to happen. Are we going to make a higher high and continue up, or are we going to test that level and go down? This right here is your dead giveaway that this is a seller's area. The market is trying to drop, because as soon as price tests that lower area, everyone gets out. Everyone closes their trades on sells, and then the market just drops. Okay, so right here, you know, okay, sellers are very strong in this area. So I waited for price to come back up again. It was kind of chopping around. This is another little mini uptrend. And remember, we're looking at this for the bigger pattern right here. So we know we're looking to sell. I'm just waiting to pinpoint an entry. So this right here is our uptrend. And remember, the market's also coming down and tapping this H4 downtrend. So we already know we're in this area. We already know that's an extra indication to sell. So what happened is the market broke below this, came up and tapped that area before falling. Okay, so this is not a perfect tap of that trend line, but you know, you can adjust it as you need to. It's not always going to be perfect. Sometimes you got to use a little bit of discretion. Really, that's your trend line right there. But the market came up, tried to test this area before starting to lose out. So I went ahead and I entered after I saw market come down right here. I knew we're already at this H4 trend line. Market's chopping up. It just broke another little mini uptrend. It broke its bigger H1 uptrend right here. There's just a couple things pointing to this bearish activity right here that we should sell. So I ended up entering right here after the market plummeted down to right here in these 2-hour candles right here, or these 2 1-hour candles right here. I entered a sell right there. Stop at 100 pips because I don't want to get stopped out on any bad moves right here. And then I went for 256, so about a 1 to 2.5 risk reward. My profit target is at this next level. If you want to be very safe, then you just take profits at the 50% Fibonacci level. So we just take our initial Elliott wave impulse. We start from the bottom, come all the way up to the top right in there. Okay, and right there, so this is the 0.5, 50% level. You can take your profits right there. Still going to give you 200, 190, whatever it is, pips right there. So that's how you can do it. If you just want to be safe, it'll typically always go to that 50% level if you've had a good break and retest and you've had divergence and a clear pattern. And then sometimes it'll go all the way to 61.8. This is more near the 61.8 level, but it's just the previous support resistance area. So I'm thinking we should have maybe a little bounce right here, and price may come back to test these lows before continuing to fall. But then again, I mean, just a bigger picture of things, this is just pointing to, you know, heavy sellers area. This is also a previous support resistance area right here. Maybe price will tap that area before falling again. I don't know, but I just know that if this is going to be a sell, it should drop somewhere, you know, pretty soon. If it's not going to be a sell, if it's going to end up being a buy or break this and test before going up, it's going to hit my stop. So either way, the risk is managed very well, 1 to 2.5. It is what it is. So let's look at a few other trades. I can't remember exactly which ones I took. I took this one. So this was a Euro or AUD JPY trade I took. Okay, so this right here, I remember this is what I was looking at. So here's our low area right here. The H1 may even be a little bit big to try to see, but let me just draw the Elliott wave pattern in. This is our low, okay? 1, 2, we have a break and retest of this area, of this level. This is also our level coming into here. So we just have a clear impulse and retest. Okay, market came up even further, pulled back, and then it came up even further to wave 5. Wave 5, remember, has to have divergence. These peaks are flat, these peaks are going up. So there's a high, higher high, there's a high here, but the RSI failed to make a higher high, indicating that this is divergent. So you could have sold that right there, down to the previous high. Take off the Elliott wave so you can see this better. If you would have sold up here, your stop loss, remember it's always a 1-to-1. So we just take our profits right there at the previous support resistance area. So you're going to be going for 37 pips, so you only would have been risking 37 pips for a 1-to-1. Okay, and like I said, if you're getting a good entry, you can even put it more like a 1-to-2 risk reward. Risk 18 to go for 37. Either way, this went straight to the profit target, worked out. I didn't take that trade. I didn't see that move happen. I just wasn't looking at this pair or this chart at that time or whatever. And then the market came down, and then it came up and then retested this area. I think maybe my trend line was a little bit off. If we connect something like that, that still works, because we still got all of our wicks tapping this area. But either way, the market came back and retested that area. Also, if you want to use a little bit of extra confidence, you can take this initial breakout of that trend. Remember, we're already at wave 5. 1, 2, 3, 4, 5. We just started from the low or the range or the downtrend or uptrend or whatever, broke out and tested it before continuing up, okay? That's where you start. You start anywhere where there's a range or price chopping or a low or a high. And you see a breakout and retest before a continuation. Okay, so if we're looking at Fibonacci, we're just looking at this impulse down out of this range. So I'm just going to start right there, pull this out. You can see price came around to our 61.8 level before chopping, came up, tried to swipe higher, couldn't bring it much higher before it started to fall. So here's what I did. I ended up just entering this trade after I saw price chopping out. Okay, so I think I entered on a lower time frame, or I may have even entered right as I saw this rejection on the Fibonacci, and then I got a little bit of drawdown. I think that's what happened. I think we saw pin bars right here, and I called this trade in my group saying, okay guys, AUDJPY is probably going to drop. So I entered right here after I saw these pin bars happening with a stop just above that in case it would have come up. So yeah, so we had a little bit of drawdown. Looks like 20 pips of drawdown. Yeah, just about 20 pips of drawdown before we fell to the take profit target later in the week. So that was a pretty solid trade. Had a lot of trades that didn't work out this week. Let me see if I can find them all. This was a trade I was going to take, but I ended up not taking it. Yeah, I was waiting for price to come here near the 61.8. So it looks like price came right there. I didn't enter this trade. I guess I just wasn't watching it at that time. But this is a trade I would have gotten. I would have been in drawdown right now if I would have taken this trade. But it still was a pretty good trade. This was just long-term downtrend. Market breaks out, retests it. I would have taken it on the retest right there. There's no Elliott wave pattern in this. There's no divergence. There's nothing. This would have just been a technical trade. And I do trade a little bit of technicals. There's nothing wrong with that as long as you use enough confluence, okay? So let's go see if we can find another one. Wow, I was waiting for this to happen, and I guess I never saw it on Friday, but this is pretty good. This is going to be a trade that you could probably enter literally right when the market opens. I don't know how to get this off my screen, but when the market opens on Sunday, you could probably take this trade right here. This looks pretty good. Anyway, big picture, let's go to H4. You can see right here we had our market come up here. So this is our clearly defined range. Got above it, came back into the range. Then we got above it right here, came back and tested before continuing. So just this simple stuff really. This is our range. 0, break and retest, push up further, retest, and then come up to wave 5, and these are all divergent. Remember, if wave 5 isn't divergent, it's not wave 5. Just don't take it. Even if it is technically wave 5 based on just Elliott waves, I don't take it unless wave 5 peaks are going up and RSI is going down, because that indicates we've been running up long enough and we're having divergence. The market's already overbought. So that right there was a pretty good area to sell in. You could have sold that peak right there at the top down to the previous high. So if we're just going to lay this out right here, let's say your entry would have been up in here on the higher high or maybe right in here, but let's say you get a bad entry and you enter right here after it starts coming down. Take profit is going to be 62 pips. Stop loss is going to be 62 pips. That's what it would have looked like. And then on these trades, I did a webinar with this guy named Alan the other night, and I told him if you're right, it's going to go straight to your profit target with no stress. If you're wrong, it's typically going to chop around, spike up, maybe wick out, and or maybe just go straight to your stop target and then stop you out. Never get emotional. Just analyze it, enter your trade, and then leave it. Walk away. If you change your take profit based on price action, I don't recommend that. But if you do, only change your take profit. Never, ever, 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 ever modify your stop loss. Once you hit your stop, do not ever move it further. I never even move it closer because that can sometimes get you stopped on a good trade. But I personally, I don't. There's like 99.9% of the time I never ever change my stop loss. Once you enter that, you're doing that. You're entering this trade while you've done your analysis, while your mind's clear, while you've seen everything for what it is, and then you put your stop loss in there. If price starts playing with you and going sideways and wicking out, that makes you emotional. That makes you make emotional decisions, which are bad decisions most of the time. Do not change your stop loss. This one would have gone straight into profit though. I didn't take that trade because I wasn't watching that. You see how much money I leave on the table just from not watching charts? Then the price came down, chopped around, came lower, broke out of this area, came up and tested this area, okay? So this right here is what I'm going to be expecting to do somewhat of a like a Elliott wave breakout. We're not going to know it until it actually starts forming, but essentially we're looking, this is a significant level where price rejects it in the past. So price is hitting that level with rejection. It's also rejecting this downtrend area, and we're starting to fall. So what I want to see to take this trade is on the H1, I want to see price break out of this little uptrend area. Like I said, we're just sniping our entry with the idea that we've already been in a higher time frame H4 Elliott wave pattern, divergence and a sell, so this should be dropping. So I want to see price break out of this area, come back and test it with wicks or bearish candles before starting to fall. Okay, I'm not going to take this trade here, not going to take it if it comes to here. I'm going to wait to see if it quickly comes out of this area and then comes out and gives me a good retest and chops out and fails to make a higher high before entering this trade. If that happens, here's how I'm going to manage my targets and stuff. Just like in all the videos I've said before, you want to take 50% of the previous impulse. So if we're looking, our Elliott wave pattern started down here, came all the way up to right here. So the profit target is the 50 level. Okay, so I'm just going to draw a line here to show that profit target area. So this level right in here is a profit target. So I'm going to take off the Fibonacci so you can see. So that's our profit target. Now let's look at where our stops and stuff will go. Right in here, if price breaks and retests here, it should go straight down. So my stop is going to go just above that high. So if we enter, let's say if it chops around, breaks down below here, it comes up and tests, let's say we get an entry somewhere in here. Okay, my stop's going to go just above that high right there. My target's going to go down here. So we will be risking 30 pips, just about to go for 70. 1 to 2.3 risk reward, good risk reward. It would be a small loss if we lose it, be a decent win if we win this. Okay, so that's what I'm looking to take next week on this. I don't think I took any other trades last week on this pair, but that's what I'm gonna be watching for. Okay, a few other trades. I'm trying to find the ones I lost so I could show you guys. I know I lost Euro AUD. Yeah, I got stopped out on this. So what we have right here is, this may have been a lower time frame move. I can't find it. I can't find what it was, but I know that right here. Wow, okay, this was it. Sometimes I'll do analysis on like a different platform and then I'll leave it on here and won't have anything. Anyway, so here we go there. We've been going down for a while, but right here price started sort of respecting that trend line area. And so I was like, okay, cool, like, you know, if I see a good enough pattern, I can take a sell at that area. So let me see, this was most of the analysis was done in here. I know that I entered a sell somewhere in here and it just wicked up and I got stopped. I don't have my trading platform screen on, so I can't, without seeing that, like it's hard for me to remember why I took this trade. It was like a break and retest. Elliott waves was that divergence. So this must have been it right here for earlier in the week. So this was our little area price was chopping around. Broke out, came back for a little retest right there. This is not very clear. Came back up, came down, came up to wave 5. These two peaks were going up, these two peaks were going down, and it was at that downwards trend line area, so an extra confirmation. So price came back in here, your target just would have been right here, this previous peak. That worked out. I'm trying to remember. I think I actually took the trade right here for a sell because after this Elliott wave pattern the divergence, we had a break in the retest of trend, which was this area that I was looking at right here. So uptrend. Typically, you're going to start down here. So let me see. I'm trying to figure out which one. I don't remember when in the week I entered this. So it would have been right in here. I remember this because I was in this for a few days. So it tested this level right here before starting to pull away. So I was like, okay, I can take 50% of this previous move, which would have been like somewhere in here. So I remember I sold somewhere right in here. But here's how the system would have looked. If it tests and comes down here, you get a bad entry. You'd have entered right there. Take profit would have been 50% of the previous move. So let's just say it was something like that. 70, you want to risk a small amount to do that, at least a 1 to 2. So something like that. So yeah, I got stopped on this move. And I think I took a trade somewhere in here too. I'd have to have the thing pulled up on my screen. I can't remember off the top of my head now because I take so many of these trades. But I did get stopped out, and I think it was on this crazy move up right here. But either way, that's it's good because the risk was managed well. It was a small loss, and price just shot up. Came back and tested this H4 downtrend before continuing up. So we'll probably see more upside to this, probably into these previous levels, or it'll retest this high before playing around and then dropping, or playing around and then going up. So those are a few of the trades I took last week, guys. I hope you guys learned something. I hope you guys were able to see a little bit about how and why these trades are taken, so that it helps you out. And I hope that seeing me analyze this right in front of you and showing you the little wave patterns and divergence, and kind of using trend lines, using significant levels in confluence with your analysis helps. If you guys have any questions, just shoot me a message. Always keep it real. Just know you're not going to have a profitable week every week. Know sometimes you're going to get like emotional, a little bit confused, a little bit this and that, but just manage it. Just say, okay, it is what it is. Review your losers, review your winners, and then after that, just chill the rest of the weekend, and then come back to the market on Monday with a fresh mind and just do exactly what your system says you should do, and just take those trades, okay? So, like I said, if you guys have any questions, just shoot me a message. I'll talk to you guys later. Bye.